Hello everyone and welcome to this analysis video. In this one we're going to talk about gold XAU USD and it's really because there's something important here today, guys. There's something you can really learn from, and it's something people don't normally realize either. They're not sort of open to it, and their eyes aren't focused on what they should be all the time. So if we're just checking on the monthly at the moment, we know, because I've looked at this on an analysis and on live streams many times, but just flicking back for the bigger picture, as I say, we came right up with gold, beat the high over back here, okay, and that put you at an all-time high. And then we returned there and we looked short again because we know that's where sellers are moving in the market. Our job was to infer where are people getting rid of their holdings, okay? And we know that because we saw already where it happened before. And we know the market repeats itself and it has memory. And we know our job as a trader is to read through what's happened on a chart and understand exactly that. Okay, so your job, if you're trying to make money trading, okay, or you're doing anything like that, you're going to need to be able to infer where people are moving in and where they're moving out of the market. So often if they previously held a long, they'll be looking to get out higher up because they want to maximize the value. And if they've got in high and they're shorting, they'll want to get out low, again for maximum value on their trade. So if you've seen on the chart where that's happened before, you should be able to infer that that may happen again. Now, along with that is understanding where candle wicks are and how that is going to cause a reaction in the market. And that leads me on to what I'm about to speak about. So we looked short here and we went over this. I said this a few times. We called it short and we exited early. Now, I said it was an early exit because of the early price action. In other words, I was able to infer where people are moving in the market. And I can do that because I've trained my eye for many years and been taught by some great people to be able to do that. Now, that's something you can learn if you know what to look for. But really, the main reason originally why we looked short is because we're ramming into all this price action. So you've got all this going on here. You can see it's where price was fumbling along, and you can only expect, as a trader who knows what they're doing, to see a further reaction when you return. And that's exactly what we got. Now, the depth of that reaction needs to be known before you take that trade. Because once you're in and you're going to decide, you know what, I want a massive risk reward return. I want a 10-1. You decide that and you control what happens. As you'll know, it doesn't go like that. You need to decide that based on where price action levels are. And that's exactly why we killed it early, and you can see it reattacking. Now, here's the key thing. We're reattacking, and we're seeing all these little ups and downs. Loads of little ups and downs, very tight margins, and low amounts of real movement. Okay, and it's like what you saw back here. Now, the reason for that is because you're hitting on historic price action levels. And if I just flick back to the weekly for a minute and clear those arrows, you can see how many of those levels there really are. You can see how many little candles there were previously. And that's why you're getting the same reaction now, because when you return to those levels, they all have to be broken, or they all have to be hit, and people have to move in and out and in and out and in and out on all these little levels that have been inferred as good places to get long or short. And there's so many of them. And that's why you fell low, you hardly fell low, mixed in with strong sentiment. And that's why you're seeing the trickling now. So I've been scalping it side to side. In other words, I know that these levels are going to be broken and then reattacked because there's so many of them. And eventually this will end. And that's why you need to trade small at all times. Because if this blows to the upside, you don't want to be exposed massively. Okay, and if it blows to the downside, you also don't want to be exposed massively. So your job is to make sure at all times you're trading small and you're diversifying your portfolio. Because if you're trading massively and you're looking for those small moves because you have managed to infer that there's lots of price action levels, okay, once it does burst either way, which it will, and we all know that, there's no point in pretending it's going to go sideways forever. This has to move up or down, and you might even get it today. You've got the ADF employment change in November. that is dollar based, really. So, or US based, if you like. That's in 39 minutes. And then after that, 53 minutes time, you've got the GDP annualized for the Q3. So that may happen then, it might not. But if you're trading too large and you get a massive move out of this tight price range where price is going up and down very minutely, you're going to be overexposed and you're not going to be ready for that move. So if you're going to trade this side to side, like I said, it's a scalper's market. You need to be in and out quickly with low sizes. Your risk can't be high. Your risk should never be high at any time anyway, but especially for that. Now, because of market sentiment, it's being held up quite a lot, and you can see there's an early reaction to re-attack this level. I wouldn't be surprised if we do so. Okay, and you maybe even bump slightly higher than it, but at any time, anything up here is going to constitute a light short for that reason that I just said. Okay, now if we flick to the daily, you can also see the 200 MA is up here, so perhaps we'll rise nearer that, and you can see that because you're getting quite full body candles. Okay, again, inference. Are people buying this a lot or selling it a lot? That is your job as a trader. That's the whole point of the candles. It's so you can see price data. And once you know what to look for in the price data, you'll see things go right. But if you're buying and selling willy-nilly at silly market value prices where you don't have an edge, things will go wrong. So that's a breakdown of gold. There's lots of traders who like gold. Guys who learn from me also like to look at it. And yeah, I'll see you in the next one. If you want to join my new really cheap subscription, just go in the signature below this video. There's lots of resources in there, and it's mega value, guys, and it's great. So thanks for watching. Hope that really helps. Let me know in the comments if it does or it doesn't, and I'll see you in the next video.